So we are seeing strength back in the Singapore tech sector, the Singapore tech stocks today, right, with the US market rebounding strongly last night. So Dow Jones have gone up by more than 1,200 points, even the S&P 500 and the Nasdaq has gone up by more than 5 and 7% as well, right? So, and the reason for that was because of data release that shows that inflation is kind of like peaking out, all right, and kind of like retreating, and that's where, all right, we are seeing strength in many of those tech stocks as well. They've gone up by more than 5 and 10% for the US sector as well. Right, so where are we right now in terms of the Singapore tech sector? Are we seeing strength coming back? Could we actually have bottomed out? Is it time to turn from like a downtrend? I mean, the weakness we have seen over the past few months, and could we potentially start to hit higher right now, right? So let's take a look at these three stocks in today's video, the three popular Singapore tech stocks, and that would be AEM, UMS, and even Franken. So most of them have traded lower, pretty much pushing lower and lower, but with this news last night of inflation peaking, that's where we could potentially see some signs, right, of it moving up and maybe even a start of the uptrend forming. So let's go ahead to dive into these three stocks right now. Alright, so let's take a look at AEM first, one of those heavyweight tech stocks in the Singapore market. Alright, and we are trading at about $3.62. So, in my previous video on the Singapore tech stocks, I talked about AEM as well, and I mentioned that there was this really strong support around the $3.90. When it seems like since last year, for more than a year, we have like consolidated above, rebounded. Look at this right here, we touched about 3, 4, 5 times, and finally, somewhere around October, we broke this 390 right here, and we sold down quite badly until we found support coming back at $3 again. So we went from like 390 to $3 in a couple of days, and we found some support and consolidated, and we are starting to push our way back up, right? So this $3 would be a really key psychological level. You can see this was where we were in 2020 as well, right here, as we consolidate before pushing higher. So we can see that we kind of like touched this level and started to push back up. So over the past like 1-2 weeks, we were trading from like $3 to $3.30, and finally managed to get back above this green line. So this green line will be what we call the 20 days moving average, right? It's a 20 days moving average, a short-term moving average. So with prices kind of like, right here you can see as we traded down, all right, below this green line. So prices below the green line not so good, or in the short term, and with the green line pointing down, you can see pointing down right here, we kind of like sold off really badly from like 460 all the way to $3, and of course, as I mentioned, we broke this 390 as well. All right, but right now you can see that this green line, right, this green line is starting. Let me just zoom it in for you. You can see this green line, 20 days moving average, is starting to flatten out. In fact, it's kind of like pointing up right now. And of course, prices has gone back above that green line. That's a good sign. That's a good sign of strength. I mentioned, right, as we break above this 330, right, 330, 340, a temporary resistance level with this green line pointing up, prices above it, that could be a sign of strength in the short term, right, potentially back to the resistance level. So what would be the resistance level? I would say the resistance will be back to maybe that $3.90 to $4 level, which was pretty much the support level that we have broken down now. That could be this resistance level whereby we might kind of like attempt to break above it, or maybe see some profit taking near there, but that could become like the next upside whereby some selling can actually come back again, right? So with this news of inflation kind of like picking, and kind of like seeing some signs of all these rate hikes, more than 6 rate hikes being done this year, and there are some signs of these rate hikes kind of like working finally, right? Inflation coming down. Those are all good signs of tech stocks coming back again, right? In terms of strength coming back again. That's where when I talk about inflation dipping, retreating, these are all good signs for the tech sector, especially, all right, which I've seen heavy selling since end of last year when it talks about all the rate hikes and all that. Alright, so this is AEM right here. I think right now there are some signs of the short term moving up, all the way up to maybe about $3.90 to $4, and that's where some profit taking can come back again. Right, in terms of the longer term, so the longer term we will look at the red line and the blue line, which will be the 200 days moving average blue line and the 100 days moving average red line. You can see that both of these two lines are pointing down right now. So mid to long term trend, unfortunately as of now, there are still no clear signs of it, like moving up or maybe flattening out yet. There are still signs of it moving down in terms of the mid to long term. But of course, mid to long term pattern takes a while to show up, but in the short term, we can still move up and down, which is what we're seeing right now. So we can push up to maybe about 390. Hopefully we consolidate a little bit higher, maybe break the 390 to push higher. And that's where, if that happens, I think the red and maybe the blue line will start to flatten out, maybe start to reverse back up, and that's where we can tell if the mid to long term trend has also turned up as well. Alright, next Singapore tech stock to watch, which would be UMS, right here trading at about $1.04. So very quickly, this was where we bought for UMS just in September, before it kind of like sold off quite badly when it talks about more aggressive rate hikes. You can see that we kind of broke this 120. So 120 was a really strong support, holding above like 1-2 months. And when we break this 120, you can see that the sell down happened quite fast. From 120, we went all the way to like 90 cents or 80 cents, and we found a bit of support, consolidated, and finally today we managed to get back up above the $1 psychological level. So $1 would be a psychological support, it has turned resistance, and finally we have broke above this $1 level. So that is a sign of strength as well in the short term, alright. And of course, this 20 days moving average, as I mentioned, when with 20 days moving average, the green line is pointing down, prices below it is not really a good thing. It shows that there could be some short-term weakness, and that's what we're seeing right over here. You can see that this green line was pointing down, sloping down aggressively. Of course, we broke the 120, it went all the way down, and over the past like 1 week, these prices managed to climb back above this green line. And this green line, you can see, it's kind of like not really pointing out. I think it's flattening out right now, but I think over the next few days, if we can hold above this $1, this $1 would now be like a new support level. So if prices are holding above the $1 level, I think this green line will potentially start to move up or kind of like point up, and that's where potentially this upside in the short term can happen, all the way to maybe around the 110 to 120, right? Why 120? As I say, 120 was a really strong support. We broke down, so we might actually attempt to retest that level, and that's where some profit taking can come back again. And also look at this, right? The red line and the blue line, the longer term moving averages. You can see this is right over here, right near the 120 level, and that's where we might actually hit to before some selling comes back again, right? So that is where the longer term moving average is still pointing down. So longer term trend might actually still be down for now. We still need a bit more confirmation, more days or more weeks or months to play out before we see a clearer sign of it actually reversing up. But right now, longer term trend is down. So as we push up in the short term, that's where you can also think about taking some profit, getting out as we hit to some of those resistance level like the 120 that I talk about. Okay, Franken, F-R-E-N-C-K-E-N. This is one of the other Singapore tech stocks whereby we have seen heavy selling over the past 8 to 10 months. Yes, many bearish signals. Maybe I'll take a look at the system, what it says later, but we had many bearish signals coming out from this stock that turned from like an uptrend to downtrend last year and started to push lower and lower, from like $2.50 to $2 to $1.50 to even below $1 as well. So the previous low, I would say the most recent low was around at 80 cents right over here, and managed to see a little bit of support. Alright, and finally we managed to break above that 90 cents. So 90 cents was kind of like a little bit of a resistance over the past 2 weeks, traded below it, and today finally managed to break above 90 cents as well. So what could be the short-term upside? I think all the way up to maybe around that $1.10, also where it was supported as well. You can see this right here, this was in August, very strong support around that 110, and when we broke down, you can see this started to sell down all the way. So 110 would be this resistance level whereby we might actually hit to in the short term, and that's where some profit taking can come back again. So in terms of like Franken, compared to like UMS and AEM, I would say that Franken is one of those more firmer downtrending stocks. Compared to AEM, which came down a little bit, UMS came down a little bit, alright, but not really in a very firm downtrend for the other two. But for Franken, we have been in a really firm downtrend, right? With what we call prices pushing lower, forming what we call lower highs as well. As we push lower, you can see that the high became lower and lower, and this longer term moving average, you can see the red and blue line come like cross each other somewhere around February, and both of these two lines are obviously still pointing down very firmly, very strongly right now. So longer term trend for Franken, it probably take more time, right? More time to get a confirmation of a reversal, alright. But right now, I would say that this is a little bit more bearish too. So as we push up to certain resistance, same thing, 110, maybe near 120 as well. I think that's where we can see some selling coming back as well. So you might want to think about taking some profit. If you've been holding on to it, it's good to also kind of like let go, take some profit, because anytime when the Fed comes out and say they want to hike rates more aggressively, or inflation numbers kind of like still staying at elevated levels, that's where we might see weakness in the tech stocks again, and these stocks can all start to turn down quite fast as well. Alright, so this is Franken. I hope that you have taken note of some of the key levels. Above 90 cents, it looks quite good, quite a good push up today, but anywhere near 110, maybe even 120, I think that's where selling might come back again. Alright, so right over here, let me just shift it up a little bit. I think that could be kind of like the upside from 110 all the way to maybe about the 120 level. Alright, so here is Franken on my 1GT system, one good trend whereby we had a couple of bullish and even bearish signals that have came out over the past few months as well. So it kind of like guides us on entry and exit, when to get out and all that. So we can just simply type the name of Franken right here, and this is what it says. So it's one of those really good uptrending stock, in 2020, 2021. See really strong uptrend, green bar, bullish signal as it pushed up from like 90 cents all the way to 250, and then the trend started to turn and we had like bearish signals coming out in terms of this. But look at this right here, this was in November last year. Red arrow down, it went down, red arrow down, went down. So as it kind of like rebounds up, we got a red bearish signal, and then it started to push down again and then rebound a little bit, and we got a red bearish signal coming out again. So you can see that it started to push down and down from like $2.50 to $2 to even below $1. So let me just zoom into where we are right now. I think this was the most recent bearish signal somewhere in September, as we're just trading above that 110 level. I think we broke this level. As I mentioned, we got this bearish signal, it broke and just sold all the way down to around that 80 cents, got an exit, another bearish signal, and finally we got this exit signal. So there's this exit from this bearish signal. So every time there's an entry, there will be like an exit signal as well. So right now there is an exit from this bearish, so there's like no bearish or no bullish signals right now. It's like just a clean sheet, it's neutral. But as I mentioned, as we push up a little bit towards that 110, 120 level right over here, as we push up to here, maybe we might see a bearish signal like what we have seen in June, July. So you can see right here we got a bullish signal, it went up a little bit, and then we got this bearish signal, and the downtrend actually started as well, right? Like what we have seen over the past many months, right? As it push up, a new bearish signal came out and actually pushed lower, right? Push up, bearish signal, push lower. So same thing, we might actually push up a little bit, maybe to 110, 115, 110, 120, and if a new bearish signal comes out again, and of course with the market pushing lower with more aggressive rate hikes, there might be a new bearish signal coming out again, and we might even push lower again, right? So you can use this opportunity to get out on strength. I mean, especially if you're holding on to it, just all the way down blindly, you definitely want to think about how you can reduce your exposure, get out on strength, especially if you hit to those resistance level that I talk about, the 120, 110. I think that's where some selling can actually come back again. Yes guys, so there we have it. These are the three most popular Singapore tech stocks: AEM, UMS and Frencken as well. So as I mentioned just now, we might actually see some short-term upside because of this news in terms of the inflation peaking, alright, we're trading lower. These are all signs that the rate hikes are working, and people are kind of like riding on that, the fact that we have slowed down really badly over the past few months. Whenever there's any good news, especially if inflation comes down, people want to ride on that. But in terms of the mid to long-term trend, we can still be down. We still need a little bit more confirmation. So anytime things can change, right? If the Fed comes out and say that inflation is still high, we still need to hike rates going to next year even more aggressively and all that, then we might actually sell down quite badly as well. So just take note of that, right? Take note of that. And in terms of the short term, we might see some strength, as I mentioned, to certain resistance level, but when it's approach certain level, selling and come back again. So if you are kind of like looking to exit, that could be a good level as well, right? To take some profit, especially if you have got in near the bottom as well. Alright, so Joey here. Thank you so much for watching. I hope I've given you an idea of where we are for these three stocks: AEM, UMS and Franken. Make sure you smash the subscribe button below so that you will not miss out on any videos like this, and also give me a like as well. Hit the like button, that will really help out the channel, and thank you so much for doing this. Right, so Joey here. Thank you so much for watching. I'll see you in the next video. Take care.